I feel like I'm losing my mind. Is everybody in the world blind? Please, Lord, give me a sign, a sign.
I wanna be the greatest. Everybody on the fake shit. I look around and feel like everybody is the fakest. I make this every day and I'm impatient, hoping one day I blow up from the basement.
Yo, what's up, everybody? Welcome to the Mark and Mo Show. Let's hide this real quick. My name is Mark. I'm a YouTuber. You can find me on Half Breed Observer as well as Uncultured Currency. To my right is my co-host. Introduce yourself.
Hey, it's Mo from OTB Clubhouse. Sorry, there was a bit of a lag today. I don't know what happened.
Yeah, my bad. So, well, let's get into it. Apple. We talked about it last week, right? The event. I didn't get too deep into it.
Yeah.
I kind of want to see what the reviews are of the products and everything like that. Are you going to buy a new iPhone 15?
No, absolutely not.
Do you know the YouTuber MKHB?
No, but Mark, you're cutting out back and
Marcus,
forth. I don't know if it's something to do with your internet or if it's the mic.
Oh, is it? I don't know. It might be the internet. Can you guys hear me perfectly fine? Give me a thumbs up in the chat if you can hear me. Hopefully, because we've been having some technical issues before the show even started, on my end at least. So let me know if you guys can hear me perfectly fine or not. Yeah, so what I was saying was, do you know who MKHB is?
No idea.
Okay, he's a YouTuber. He's super famous when it comes to doing tech reviews. And he's finally dropped basically all the reviews of the new iPhone products that came out there. And honestly, it's not very impressive. I don't understand how Apple is a $3 trillion company anymore. I know on the books it makes sense. They make a lot of money. I get it. And they have good returns on their products and everything else. The margins are great. But overall, I just don't know how long this can sustain, to be honest, if they're just releasing the same crap over and over and over. And that's why I noticed how people are getting frustrated with Apple, because I'm an Apple consumer as well. All my products here are pretty much Apple. If you're an Apple consumer out there, please put a 1 in the chat. And then let me know if Apple pisses you off as well, because you see Samsung, you're seeing all these different companies doing some innovative things, and Apple is just so freaking behind. And this last one was just so annoying. So annoying. See, blasphemous. Exactly. I'm getting tired of it, man. You're an iPhone guy too, right?
Yeah.
Yeah. Okay. So it's just annoying. I don't know. Do you think in the next 10 years, Apple will still be a $3 trillion company?
I don't know, man. It's a hard, like with AI, with 3D printers, I think we're heading to a world that we've never seen before. Just like we've had a 13-year run for the bull market, there's a lot of companies that are reinventing and doing things that we've never thought of. Like, there's so many different ways of making money and doing things now that we've never thought of. Like, it's been crazy. But I think what most people forget, though, is Apple, the amount of data they have about customers, the team they have, the people that work for them, and the formula they have for success. It works because they know their market. Now, if the market changes or the market lifestyle changes faster than the innovation Apple does, which, me and you understand that they're not innovating as fast as they should be, it's also because they don't have competition.
Yeah, I don't think anybody has such a great ecosystem like Apple does. I know Google tried, and Google has a relatively okay Apple ecosystem. It's just not as good as Apple's yet. And Samsung, it's kind of a mess. I'm gonna be honest. Like, they're getting a little bit better at it, but it's still kind of a mess. In the end of the day, I hope that Apple will innovate, because it would be nice to have a freaking watch that's not a square in the circle. Like, is that so hard to ask for? Or maybe it's because, the carbon footprint, they just want to keep recycling all their stuff and keep telling you, for all those climate change junkies out there, they get excited about that stuff. But I think the average consumer really doesn't care. And they just want something that looks good, works great, and that's somewhat different instead of always selling you the same crap over and over and over. I will say the laptops and the iPads are awesome. All right, enough of Apple. Let's get into some random talk here real quick. Don't worry, guys. It's not going to be anything entertainment related.
Trigger warning. The following content may contain opinions, thoughts, and subject matter that could be sensitive or triggering for some individuals. Viewer discretion is advised.
All right, I talked about dividend investing not too long ago, right? I revealed my portfolio and showed you guys what's in there. I was talking about some of the stocks I was interested in buying. I've been keeping an eye on a lot of these dividend stocks. They've been getting beat up pretty bad, Mo. Have you noticed?
Sorry, which ones?
The dividend stocks.
Yeah, dude. Like the market overall, everything is just like September. It's that month.
Yeah, they're hurting pretty bad, man. It's funny because when tech was selling off and when tech had a hard time, all the dividend stocks were running up. I started opening my dividend portfolio end of last year. I've been slowly buying into it. I've got my prices are pretty good, so I'm not down a lot, not at all. But I noticed Dollar General, man, it's down 55% year to date. That's pretty big, man. And they're essentially back to where they were, or getting close to where they were right before the pandemic. And they have a 2% dividend, by the way. Right now it's at 109. Then you got Dollar Tree, which is also down. It's close to its 52-week low. Target, Macy's, and Solar Edge. I'm not a fan of Macy's at all. I am invested in Target, full disclosure. I do like Solar Edge, but those are they're getting close to their 52-week low as well. I think Target is actually at their 52-week low. What pisses me off about Target, though, was it 2 years ago when I discovered the co-op series? I did a 2-year leap on Walmart, and Walmart did jack shit for 2 years, man. It was just a theta decay. I took a small loss, but I finally sold out of it. And it was I had to decide between Walmart and Target. And I was like, well, everyone goes to Walmart no matter how much money you make. But, a lot of people who are on a budget go to Walmart. And seeing that, we were dealing with the pandemic and the possible recession, I invested into Walmart. Didn't do much. Target ran up, though, ran over $200. So finally, I sell out of Walmart, waiting for Target to come down. I'm like, all right, awesome. It's at 130s. Let me start buying. And the son of a bitch keeps going down. So now they're at the 52-week low, and Walmart is at like 167 or 170, something like that. So it's running up. It's fucking pisses me off when that happens. But that's what they say about patience, right? And then Procter & Gamble. I am investing in Procter & Gamble. It's also getting down there pretty low as well. So for all the dividend heads out there, if you're interested in dividend stocks, this might be an opportunity. I'm not your financial advisor, but I'm saying, like, I remember when tech was selling off. I'm not going to lie. I stood on the sideline for most of them because I just didn't feel comfortable with tech, because you know how the volatility is with these stocks. They will go down 50-some% and then jump back up 80% like Tesla did and stuff like that. So, it is what it is. And then if you guys want to check out an awesome website, Inside Monkey, they kind of show you all the companies that have insider selling and puts and calls in place. It's completely free. Check it out. So yeah, guys, please, thank you so much. We have 42 people so far. Like the podcast. All right. All you, Mo, what's going on?
Right. We're going to circle back on a couple of things we did last week. So last week we did a workshop on A+ setups. You guys blew up the video. Thank you so much. With that, I launched my e-guide. I had about over 100 downloads, and I think you guys might have broken the Gumroad product code, so I had to recreate it. I got a couple of emails saying they can't download it, so I'm going to send a link again, and it should work. Don't worry, it'll be $0. But I gave out a play last week, and that was AR, and it was an A+ setup, right? And it didn't work out. And I wanted to share my screenshot on how it did, so there's full accountability, which I promised you guys. Give me 1 second. Let me see how to share this. Hold on.
Everyone, please smash the like button. Share this with everyone. Please let's get some people in here.
Mark, do you know how to share a screenshot? Or
should be able to click share, or maybe it's slides. Is it maybe slides?
Let me try this. Okay. Can you guys share this? Can you guys see this?
I see that, yes. Just kind of maximize it.
Okay, let's see. I want to really talk about it, and that's the
that's as big as it goes. I guess stretch it in the corner. There we go. Now zoom in with that. Yeah, there you go. More. Zoom it in. Make it big. Make it big.
So I took I took a 31% loss on it, and this is a screenshot with this timestamps when I got in, when I got out. I've told you guys before, if I take a trade and if it doesn't work out, I'll be posting it. So this is my first trade that didn't work out. And I'm like, you know what is a better opportunity to talk about it? Because it's easy to not talk about it. And the reason why I am able to talk about this is because I don't really take any of this stuff emotionally. Like it's just part of the game. It's probability for me. The trade didn't work out. The first level that I had I gone out, then I would have lost about roughly 12%. This was a big position for me. So when we got to the 50 MA, the moment that broke, I completely got out. But I wouldn't do anything different with this trade. The setup was there, the news was there, the flow was there. So we're gonna get into this. Give me 1 second. Let's start the slideshow. All right, let's get started. So before we get into the actual workshop, which is how to take a loss gracefully, I want to give you a formula for success, which is why I want to talk about this today. So I wrote it down, and it's not by me. I took a training with Myron Golden, something he said. So I wrote it down, and it said, if you don't like the output, change the input. Okay, I'll repeat it again. If you don't like the output, change the input. I've heard this before too, but in different words. And I think it was, if you keep doing the same thing and expect different results, that's the definition of insanity, right? So a lot of people keep doing the same things when it comes to trading. They don't follow a plan. They don't follow a strategy. They get emotional. They get reckless. That's what we want to talk about. I can give you a million A+ setup plays. It doesn't matter until you fix the leakage. It's like a funnel, right? There's inflows and there are outflows. I know people with an 80% success rate, but at the end of the month, they're break even or they down, because when they're up, they take their profit fast. When they're down, they hold it for long, and has nothing to do with technicality. It's just how they're wired. Most of the time, it's because something in their personal life is carrying over into their trading. So let's get started. So who is this workshop for? It's for people that are lacking consistency. It's for traders that get that fear, right? I ask this question in my one-on-one a lot. I'm like, do you ever get like fear, like feel that fear or this feeling of anxiety when you're entering a trade? And it's happening because you're recalling the last few times you took a trade and it led to a loss. And it's that painful feeling that's coming and reflecting while you're doing it, right? Other one is people that feel like they can't grow an account. I'll give you a specific example. Talk to a couple of people about that. They get to a certain amount, like they're very good traders. They took their account from, let's say, 2K to 4K. But once they get to 4K, they go back 35, 3K, end up going back to 2K, and then they keep starting over, but they can never get beyond that. And then the next one is people get reckless when they lose money. I'll have an example for that. I did a one-on-one with one of the members, and basically they were doing amazing. And I'm like, how's thing? They're like, I just kind of lost a lot of money, blew my account, $1,000 account, small account. I'm like, what happened? Basically, they took 2 bad trades, account went down. But after that, they're like, it's $1,000 account at 400. How does it even matter? So they started going reckless, and then they started taking big risks because they're like, if this works, right? If the $400 play works, I can make up and get to 1,000. But if it doesn't work, it's only 400. But would you ever do that to a business? Would you ever do that at a job, saying, oh, I've already been written up twice, let me go slap my boss? What's the worst that's
some people
happen?
might. Shoot,
Right?
some people might.
I guess some people might. Most people won't logically, but people do that in trading because you can get away with it and it doesn't feel like you're losing real money. Similarly, if you ever have a spending problem, try it. Instead of using your credit card, if you started using cash, you're going to be very aware when you're spending money, because it's like money leaving. But when you're paying through online, like ordering stuff from Amazon or using your credit card, you don't really feel it. And so that's who the workshop is for. Okay, so first exhibit is of a real person. Okay, this real person. This was sent to me 2 days ago, and I want you guys to look at this and tell me what's something that you see. And I only want you to look at it. Like, what conclusion, and Mark, you can jump into, what conclusion can you draw when you look at this profit loss? This person has been working with me this is his 2nd month. Okay, second and a half. They're at like 2 or 3, somewhere in there. And they sent me this. September's a very tough month, by the way. Like everyone knows, like up and down, like markets, like your thesis are going out the window. Swing trading isn't working. So it's a tough month. When you look at this, what conclusion can you draw from it? Or what's something that you can learn from this trader? And Mark, go ahead. Or people, whoever wants to jump in. What's the conclusion draw?
Yeah, let the people go first. But if no one responds here the next, I guess like 5 seconds, because I know we're delayed by about 5 seconds. I'll jump in. So what do you guys see? What's the pattern that you guys see here? All right, I guess nobody's answering. Okay, hold on. Cut losses quick.
Absolutely.
Yeah, let's give them the credit right there. Yeah, we must be really delayed, man.
Yeah, I don't know. That's why it's hard to do this workshop in live.
Yep. When's that wait? Yep. Good week, bad week. No, it's definitely there. He's managing his losses. I mean, day 5 and 6. It's kind of high there, I would say. Almost $100 on each one, but the rest of them he seems to manage pretty well. Day 7, he came back strong. Took a small loss there on the 8th. It was good. So it seems like he was decreasing his losses somewhat as time went on, and the wins increased, except the 14th, only $6. That's weird.
Okay, so let me break this down for you guys. This person is probably playing with a $5,000 account. They have a success rate of 38%. A 38% success rate. If you were to go to a fund and say, hey, could you trade for me? And they told you they had a 38% success rate, you'd run so fast from them. You're like, a normal trading is a 50-50 success rate. You just flip a coin and it should overbalance the probabilities, should work, right? However, I'm going to tell you, with 38% profit success rate, they're up $1,000 on this account. And the reason for that is they're cutting their losses fast. And when they had full conviction, they went heavy. So when I say heavy, they're not going outside their risk tolerance. The day 7, this trade was, I believe, Apple puts. I took Apple puts after Apple did the whole thing, and that person made $1,000 on that.
That was the day, right, that they did the reveal of the new iPhone, right? Yeah.
I think it's September 7th. That's what it was.
But I will say this, though. Had he not had that one good trade on the 7th, he would be down for the month.
Yes, but on a $5,000 account, that's what I'm trying to state. And on a $5,000 account, forget about all the wins. If you add that up, about $350 loss on a 5K account, that's about what? That's nothing in comparison. So what I'm trying to tell you is when the market gets this tough, I'm not saying this is the ideal thing to do. No way. Like, to someone who doesn't know this person, they could say that this person probably lottoed something on Thursday and got lucky. So no, I'm not saying it's ideal. I'm saying I'm trying to break these myths that you need to have this much of a success rate. You don't. This person has a 38% success rate, right? So that doesn't work. They're cutting their losses fast. Like, the biggest loss they took was $95 and $97 on 5th and 6th. That's what you need to do when the environment gets tough and you don't know what you're doing. You size small and you cut fast. That's what you need to do. Let me read the question Ron has. Mo, are you saying when people trade that their accounts go from support to resistance, meaning their accounts go to a certain point? And no, that's not what I'm trying to say. I just wanted to show you guys a couple of things, like cut your losses fast when they don't work out, and play small, which is like he took a $4 loss on it. So he went small because he's still trying to learn. So that's kind of what I was trying to say. Okay. So I've broken down losses into 2 categories. One is losses that can be avoided and losses that cannot be avoided. So if you don't follow the plan and you lose money, that's something that you can avoid it. Like I told you, 31% loss on AR. Would I do anything different? No. Would I spend an extra 2 minutes thinking about that loss? No. I just move on. That's what I do. I would just move on. Okay. Lack of technical knowledge. This is, I think, the least of the problem for most people. Most people have the technical knowledge, but they just get emotional and they can't really wrap their mind around basically how to approach this. Losses that can't be avoided, change in market structure happens all the time. Like in 2 days, the market went from we're bullish to now we're bearish. Change in market sentiment, like Powell came in, basically when he started asking questions, people started panicking, puts started getting added, we started dropping, yield started going up. A lot of people are confused. Why are we down on a pause? We should be up. We should be ripping. No, right? Like his Q&A is probably the most important part of the entire discussion. The next one is news intraday and overnight. Happens to us all the time, where you get into a trade and after hours. Big one was Square CEO resigned. Like, if you took calls because flow was there, chart looked good, and that happened, it's not really something that you can do different. You can tell yourself, oh, I'm not going to swing anymore, but that really isn't like a viable solution. 70% of gains do come from after hours, right? So like, you're giving a big chunk of your profits, unless you are just a day trader, then it's different. Okay, this is my definition. Okay, this is not the definition that you can get from ChatGPT. This is not the definition you're going to get from a trading book. So hear me out. Stop losses is cost of doing business. The goal of stop losses is to minimize your downside. Many traders see stop losses as a way to maximize your profits, which is why it almost never works for them. So what I'm trying to say is, when you open a restaurant, there is cost of doing business, which could be your employees, which could be rent. Imagine getting into a trade and not really thinking that you have a predefined loss and opportunity cost of taking that trade. What are the opportunity costs? One is your stop loss, because there's a chance the trade can go against. What's the other one? Other one is opportunity cost. If you entered another trade versus this one, that's the cost, right? Third is mental peace. If that trade was not worth it, but you basically got anxious, nervous for an hour into this trade and not get anything out of it, or you lost money, that's your loss, predefined loss, right? That's how you need to think. I've noticed a lot of people use the language, and I'll play the language because it's going to seem that you've heard it too. The language is this: oh man, I got kicked out of Amazon. If I stayed, I would have made another $200. Go back to, what's the definition of stop loss? It's to minimize your downside, not maximize your upside. That's not what the stop losses were made for. If you're going to use a hammer where you don't need a hammer, you need a different tool, it's not going to yield the same results. Same thing. Stop loss is the job is to protect, not to maximize your profit. Anyway, so far so good, I hope. Okay, so this is the rules that I live by. I'm going to read this for you guys, hoping that someone's going to say, okay, I'm going to read this book, or I'm going to go on YouTube and watch this for free. This book will change the way you trade. I don't make any commission out of this. I'm not related to Mark Douglas by any chance. This is just so people can learn a different way of thinking and trading. So, accept uncertainty for good stop losses and take profits. When a stop loss order is placed, it should be done so with the belief that the result of the trade is uncertain. And so it is entirely likely that the order will be hit. That's basically saying that when you get into the trade, you're assuming that your stop loss will happen, which is how you should be thinking. And the reason for that is, when that happens, you got what you expected and you move on with the life that you next trade. So that trade ends there, that emotion ends there, you move on. Most people get stopped out, didn't expect it, start acting recklessly. So very crucial that you understand that. With this belief, a trader will make sure that if the stop loss does get hit, and if it won't be a problem financially and emotionally, then the next opportunity can be taken with a clear mind. This guy with a $5,000 account, he loses $40 on a trade. Big deal. Doesn't matter. This guy with $5,000 now loses $2,000 on a trade. Now he's anxious. Did he use his safety money, like money that he needs to pay his mortgage for trading? Is that why he was scaling big? Because he has a big mortgage payment or property taxes due? That will impact your trading. Now it's not about technical analysis anymore. It's not about market anymore. It's about you self-sabotaging yourself. All right, let's go on. When a trade is in a profit, a trader should maintain their predefined profit-taking strategy to take profit. This we'll cover some other day. We're focusing on stop losses today. If a trade is not working out, leave it. It does not matter if this one trade works out, because the trader is confident that the strategy works out in the long run over the course of number of trades. If you judged me, my A+ setup guide, based on last week's trade or the week before, it's not a fair assessment. If one trade worked out or two worked out, it's not a good strategy. It should work out between 100 trades before it even becomes a strategy, before I even put it out. I tested this for 6 months, the A+ setup guide. It worked. Then I applied it. It worked, has worked for the last 5 months. Success rate somewhere around 98%. So I move on to another trade. Okay. So how to avoid emotional trading. Let me just fix the screen sharing here. Give me 1 second. I got to do something different here. Give me 1 second. Is it making sense so far? Do you guys have any questions while I'm doing this? Feel free to...
I actually told everyone to hold questions to the end of it.
Okay.
But while you're doing that, though, if you want, real quick, I'm going to go ahead and take a break here real quick and pull up our... Man, where is it? I think it seems to be moved around here today. I want to share this. Hold on.
Yeah.
All right. Remember, Mondays, we have Lawrence and Tiara for Monday Night Take. All right. TVPG. Bring your kids, bring your family. Everyone should tune in for that one. All right. Lawrence has some good information. So does Tiara. Great duo. Tuesday, Mark and Jolene. You already know who that is. The founder of the Come Up Series, Executive Education, also TVPG. Wednesday, we have Christopher W. Bush and Abby for Redline. They are your essentially a financial advisor and tax accountant. And then Thursday, you have me and Mo, TVMA, meaning we will curse, we will talk about stuff that's sometimes raw and straight up, uncensored. So tune in, full show. This is the lineup for 2023. So make sure you guys share and let everyone know. Back.
All right, let's get started. Okay. How to avoid emotional trading. The first one we have is risk management. I've covered this multiple times, but just to keep it short, if you are taking risk reward ratio that is less than 1, what that means is, I'll give you an example. If you make money, you get $1, but if you lose money, you lose $2. You're going to need a very high success rate. This person is killing the market with a 38% success rate. So one of the question Mark asked me earlier, we were shooting for some content, and the question was, what's the biggest indicator for you? Before I give you my supply and demand, MACD, RSI, the biggest indicator before you enter a trade is your risk management. If the risk reward ratio doesn't make any sense, you do not take the trade. The second one is emotional control. Having predefined losses helps traders maintain emotional discipline. So you won't be making impulsive decisions or holding on to losing positions in the hope they'll turn around. The emotional discipline is very crucial for consistent profitability. That's the stuff that you have to make sure that you're doing. The next one is consistency. Regardless of what you do, you need to be consistent with the formula you use. If it's the risk reward, if it's the trade size, position size, that's important. So I'll give you an example. Let's say I take 20 trades, all with the A+ guide. That's what I'm doing. But I change my position size. Okay. One trade, I put 500. The other trade, it's Apple. And I love Apple because I have Apple shares. Trust me, people do that. They have 50,000 Apple shares. They see calls coming in. They're like, oh, I love Apple. It's been 20 years. My parents made money. I'm going to make money. Your other one, so Apple trade, you put a position size of 5,000. Now it's not consistent anymore. You're breaking your own system. So regardless of what you think about a trade, your position size needs to be the same. You adding more position is you adding more risk, which isn't fair to your other trades because each trade is that unique set. Once that passes or fails, you move on to the next set. Once you add more money to it, you've broken the system. The next is, which I just talked about, probability-based thinking. When you're thing, each trade is individual. Collectively, they become a macro system, right? You can't base one trade into thinking, oh, if this is how it works. I'll give you an example. Every time I trade Apple after 7 p.m., or not 7 p.m., 7 a.m. and buy calls, it always works. You've only done this twice and it works. That's not your edge. That's you being lucky. So you need to put probability into this and then kind of place it. The next one is psychological comfort. Again, I did not make this up. This is straight from Trading in the Zone. If I haven't said that before, I'm saying that now. I'm not taking any credit for it. This is where I've learned everything I know from. If you have anxiety or fear entering any trade, you don't enter the trade. It's that simple. And the answer isn't go paper trade. No, the reason why you have anxiety is because you're not confident. The reason why you're not confident is because you don't have the technical or the psychological knowledge. When I talk about psychological knowledge, I don't really mean you're not emotionally strong. I also mean the money that you're putting in trading might not be the money you want to be using for trading. So someone who has 5K, let's say they put $200 in a trade and that $5,000 their play money, I don't think they're anxious. However, someone puts 5,000, the money that they need, and they're going to need that money in 3 months, and then they put 1,000 extra in their position size, they're going to be anxious regardless of how experienced they are. So you have to look at everything. The last one is learning from losses. Losses are only, they say take an L, it's not losses, learning. That's only if you're learning. If you've been consistently losing for 3 years and you tell someone, they're like, it's okay, it's part of the game. You did your degree, it also took 4 years. That's just like, think about what they're saying. They're not positive, they're just delusional. And I'm not trying to be rude or anything, but you like, imagine you marrying a partner that been running a business, running in losses for the last 3 years. Imagine them saying, stay positive, it's going to turn around. Whereas you're using your hard-earned money and supplementing that business, not a business, a hobby. Hopefully I haven't triggered people, but that wasn't the goal. So
no, it's a fact, dude. And I have this this image. I'm gonna try to see if I can share it up here because I want people to see exactly what Mo was just talking about. So continue. I'm gonna try to pull this tweet up. It's from a guy named Cody, Odd Stock Trader. I'm gonna share it here in a second, but keep going.
Okay, so this is a losses guide that I use. Stop loss should be decided based on levels rather than percent. I'll give you an example. You get into an Apple trade, okay? You get in at 180 because you think it's a strong level. Then you tell yourself, let me go do support, resistance, supply, demand, whatever. And based on that, you come up with a formula that the resistance at 178. So you're like, okay, that's where it's at. Now, that's so far so good. But what people from here do is they say, okay, my stop loss is 25% because Mo told me to cut my losses fast. So 25% is my loss, right? That's where I'm going to cut it. The problem is, have you tried calculating what does your option fall to if the stock goes from 180 to 178 based on the option you have? And you can do with options profit calculator, a lot of analysis tool in the brokerages, you can do that. And let's say the answer is at 35%. So basically what I'm saying is, if you key in 180 Apple by Wednesday, if it gets to 178, how much am I going to be down? And if it says 30%, you shouldn't be entering the trade plain because it's telling you that your current support level does not sustain your risk tolerance. I hope this is making sense. If it's not, we can take an example. We'll go with it, no problem. But I hope it's making sense. So it should never be based on percent because you could say 25 is where I would cut it and the stock can go 26% and reverse from there. And that's going to mentally, physically torture you because you are going to say, I wish I knew this. And then the next time you just hold a little bit longer and then a little bit longer. And it's not an objective system. It's a very subjective way of dealing with things. Next one. Yeah, we could do an example. I'll pull TradingView after this. Losses that occur due to emotional or lack of technical knowledge should be studied and fixed immediately. And this is simple. Journal it. Once you journal it, you ask yourself why you took the trade and, it will make sense. So make sure you address that. But if it's like you followed the system, you got stopped out, cool, no problem. Don't stress it. That's just how it works. Number 3, the higher the risk reward, it means the lower the success ratio you need. So for instance, if Mark only takes trade that are 5-1, he needs a very low success rate. But if you're doing 1-1, which is what everyone advocates, I have no idea why. I'm not a big fan of 1-1, meaning if you're right, you make 1. If you're wrong, you lose 1. Then you need a success rate of higher than 50% to make money. If you're at 50%, that's break even. Anything over, if you're 60%, you're going to make 10% supposedly on every single trade. Okay, last one. If a loss makes you emotional, chances are that the trade is outside your risk tolerance. Let me show you. Let's just talk about it first. The moment you go higher up above your risk tolerance, the more emotional you'll get. So if your risk tolerance is $200 and the total position size is $1,000, if you put in $5K, your trading strategy is out the window because you're not thinking clear now, because it's outside your risk tolerance and now your emotions are involved. The best traders are robotic. They don't get too happy, too cocky when they're making money. They don't get too sad, too depressed when they lose money. They're just constant. Just like they're, how do I say, they're like in a Zen state of mind. I don't think I'm there yet. So no, I'm not preaching anything. I'm not. And I want to be completely honest. I'm not there yet, but I'm getting there. One of the ways I try getting there is by keeping my position size small. Also by not looking at profit and losses. Like if I'm trading, there is your account summary page, which is telling you, okay, this position's up this much, this position's down that much. I'm in a different tab, which tells me how many options I have, 10, 15, 20, and it shows me the premium moving. It kind of keeps me like an analyst just watching numbers and making decision based on number. Let's take an example. I know you guys want to do it. I think this is it for me. Okay, so let's take an example. Give me 1 second. I'm going to pull an example for AR. You're going to notice that I love talking about my losses. And it's not because like I love losing. It's because I've mentally trained myself that the more I talk about it, the more I normalize losses. And that's what I like doing. Okay, so let's go daily. Let's go 50. Let's share the tab so you guys can see it. Okay. Let's do this. So the trade was taken on this day, okay? It was a key level. No, hold on. Yeah, perfect. It was taken on this day, okay? So let's mark this as, let's do, so this is our entry. And my earlier stop loss was, I'll give you a level. It was at 26.77. This was I'm going to mark it. So you can watch the video from last week. So there's no confusion on what I said. So this was my entry at 27.34, somewhere around there. My stop loss was around 26.77. It was a daily support. If you guys look, it bounced from here, bounced from here, bounced from here, bounced from here, sort of bounced from here. Like, so it was a solid exit, right? When it got to that level, my stop was 12%. You can go on, so the website's called Options Profit Calculator. It won't let me go back. Okay, it won't let me go back, so we can't do it for this one. But when I was down, so it was I believe a December trade. Yeah, it was a December trade. So it was let me just show you. Sorry. Let's do this way better. I'm going to show you what I'm doing in a second. And people, if you're listening to it on a podcast, like an audio version, make sure you guys check the video version too. Okay, so this was my plan. My downside on this was 2%. My upside was 6%. So it was a 1 to 3 risk reward ratio. If it went down here, I would have lost about 12%. When we got to here at 12%, I saw more buying happening, meaning I saw sweeps coming in. So I'm like, you know what? I'm going to hold this here. I'm going to hold this till the 50 moving average. So I held it. If this trade showed me, let's say, let's do this. $410 and so down is 410, up is 3. I would never take this trade. This is what I meant by having a plan. With that, Mark, I'm done. I can answer any question. If you want to share something, you can.
Yeah, I'm going to share. So what we were talking about earlier, since we are talking about how to take a L gracefully, I want to share this screenshot. I don't know who this guy is on Twitter. Someone shared this with me, and I started following him now because of that. And I think more people should be transparent about this because this is a process that we all go through. So let me share this real quick so you guys can see this right here. So Cody, it's an odd stock trader, signing off for a while. 5 straight max loss days, 7 losing weeks in a row. I need an extended break from this insanity. This is real. This happens to a lot of people. Mo, have you gone through something like this before? I know I have.
Sorry. 7 losing week. The largest losing streak I had was this March. It was for the entire month of March. I don't ever, like, I have rules in place. Like, it's not that I'm that good, it doesn't happen. I have rules in that place that won't let that happen because I don't trust myself.
Yeah, it's pretty I've never had massive losses like that either. Not 7, like that's a lot of weeks in a row. I think, I mean, me personally, I probably would have quit by then. And I want to share one more of his that he has here as well. And this looks like this was more recent. I don't know if you guys can see. He says, I base a lot of my daily happiness on my trading. How many people have done that? I know when I first started, my family knew, because remember there was like a 6-month period where I got out the military, retired, and I just solely traded for like a good 6 months. And my family always knew, especially my kids, when I got home, whether or not I had a good day or a bad day by my moods, or if I had an okay day. So try to get away from that. I know it's hard because trading is very, very emotional, but listen to what this guy is saying here. Probably not a healthy thing, but if I'm not performing like I know I should be, it screws with every aspect of my being. I strive to be the best I can, and whenever I'm in a slump, it hurts. Am I alone here? And a lot of people didn't respond to his stuff. So I'm sure there's a lot of people out here who feel like this guy. I don't know who he is. Again, if you guys want to follow him, by all means, go ahead. I just want to share this since we are talking about taking L's. Everyone here has taken an L before. Mo has taken an L. I've taken an L. Mark has taken an L. I'm sure Lawrence has taken an L. A lot of people have taken L's in the past. A lot of people just don't talk about it. And it should be spoken about a lot more, because when you get in a slump, at least I know the group that I was with initially when I first started, I met so many cool people. Like I said in the previous episode, a lot of those people aren't around anymore. And a lot of them is because of the mental health issue of this, the fact that they're losing big, like this guy, 7 weeks in a row. And they're just like, you know what, I'm done with this. I pretty much went through all my savings. I quit. And I've never experienced it. I've never gotten down to that dark place like that, but it does suck. The weird part, what I was dealing with a lot, especially in 2021 and 2022, my wins wouldn't change my mood. It wouldn't make me happy. If I win, I'm winning, cool. But when I took a L, no matter what it was, if it was $5, if it was $100, if it was $800, whenever I took a loss, I would get pissed. And that's when I knew I needed to change my mindset quite a bit. So
I worked with a lot of sports people and a lot of like personal trainers, and it's sort of like when they take a loss, they feel like they've failed, because in sports, like, it's you either win or lose, and that's the shift that you have to change. Like, was the loss controllable or not? That's the stuff you have to focus on. I just feel like this is how society is framed in general. Like, pick any social media or pick any outlet where we have attention. So attention meaning where people go, because that's what we are, trading attention. People don't really talk about their zero story. They talk about their hero story, right? Because it does well. They talk about lifestyle. They don't really talk about the process, because that's what people like to see. Like, tell me how I'm going to make 100K. Don't tell me 5 things not to do in trading. Like, that's just how it is. So, like, So your job then becomes not to place your self-worth on anything extrinsic. It doesn't have to be trading. It could be gym, because some people make their entire life about one thing, and you go, let's say, to a friend's group, and that's all they talk about. You're like, yo, we get it. Let's talk about stuff. But and it's because that's what they think that they're all about. And when that thing doesn't work, which eventually will happen, they think they're worthless. So that's one. Second is surrounding yourself with like-minded people, which is what we're trying to do in this podcast. We're trying to encourage people to be open about their losses, but really be genuine about why are those losses happening? Are they happening because, you don't have the right knowledge? If not, then we're here. We're going to teach you. But if they're happening because you're getting emotional, we need to uncover other areas. My background is psychology, but I'm not a therapist. So there's a line that I don't cross, but I have a good idea why most people are suffering. I think trading, if it didn't involve money, most people would be successful. But because it involves money and people don't have a good relationship with money, people usually that don't have money have a bad relationship with money. That's why they don't have it. And trading is about money. They really think about it, that's what it comes down to. And most people that don't have money usually have issues with anything that involves money. Anything. So that's what it comes down to.
Damn, that was the best thing you said today.
Oh,
right there, man. Right there, man. That has to be a clip, man. That has to be a clip. It's so true what you just said. And I like the fact that you were just talking about people in life, right? I know I did it. You clearly, this is your life in many ways. But that's why when we came back earlier summer, I was trying to introduce different subjects because I don't want this just to be the only thing that I live for out here. During the pandemic, like Mo, when you first started, how many hours did you spend a day to learn what you're doing?
I every waking moment, like I'm not like I didn't do sports, I didn't watch Netflix. Like, again, someone told me last week, he said, if you are broke, what business do you have going on Netflix and watching someone else live their dream? I'm like, that makes perfect sense. I'm not okay. If I'm not happy, what business do I have to see someone live their life dreams, right? So every waking movement was trading or thinking about how to make money.
Yeah. And I was very overly consumed with the stock market, but we were also in different places. The pandemic, I had nothing else going on. I was just at home drinking and learning about the stock market. So that it worked out in my favor. Had the pandemic never happened, I don't think I would have invested as much time as I did in the stock market. It wasn't until I'll probably say this year where I pulled back somewhat, especially when I got into, like, for me, it was easy. I was like, cool, I can make my trades and off. But this stuff does consume people in a way that sometimes can be extremely negative. The goal is for it to be positive because you want to make money, but it can get very, very toxic and it can be very emotionally draining for a lot of people. If this is the only thing you care about in life, you shit this shit, it can become extremely annoying, especially when friends and families who are not in it and the only thing you talk about is stocks. You become that person that no one wants to hang out with anymore. And I had to really kind of find my identity again of who I really am, because this isn't who I am all the time. I love this, but it's not who I am. And a lot of people have gotten lost in this space where this is just who they are for God knows how long, and they're gambling and losing money left and right. I also want to mention here, I said last week that I was going to give you guys some free books. I'm going to do that today.
Mark, I thought it was just me, so I wasn't saying anything. Your mic is blanking out. That's what was happening. So it just goes off for like a few seconds and then it comes back.
Oh, man, I'm so sorry, guys. I feel like I had a good speech here too.
It's okay.
Oh, well. Oh, well. Anyways, last week I said I was going to give out some free books. I do have some free books. I said I was going to give out The Compound Effect, as well as Psychology Money, but I also added a perk in there. What was your favorite book again?
Trading in the Zone is my favorite book. Trading in the Zone.
Trading in the Zone, right? By Mark Douglas, right? By Mark Douglas. Well, before Mark Douglas wrote Trading in His Zone, he wrote another book called A Disciplined Trader. Let me show you guys real quick. It's really hard to get because they don't have a real PDF file of it. They don't sell it on Amazon, and it's kind of expensive at times. But I was able to get it off of eBay. With that being said, I got a copy of it in a PDF format for you guys. I'm going to share that today too. Read that one first. I actually prefer that book over Trading in the Zone. So it's in the description below. Oh, the link is there. I'm going to drop it here until the episode is over, and it will be up until tomorrow, 5 p.m. After 5 p.m., if you did not download it, it's going to be gone. I'm not going to re-upload it. You cannot reach me on Instagram because I'm not on Instagram anymore. You're not going to reach me on Twitter because I don't respond on Twitter. So just make sure you guys download it now, share it with people. I'm going to drop the link here in a second, but let's go to some questions here. Let's go back up so I don't make sure I didn't miss anything. First one, do you suggest getting into any of the blue chip stocks and doing cover calls and buying with cash secure puts, possibly TQQQ or UPRO, and maybe Amazon or Google? I don't suggest anything because I'm not a financial advisor. Do what you got to do yourself. But me personally, I'm not gonna listen. Kevin is getting sued for this shit. I'm not. He was actually giving like real financial advice. Apparently, looking through people's portfolio. You're not gonna catch me in one of those. But when I do vertical spreads, cash secure puts and stuff like that, I mentioned this before. I started off with stocks that were under $15 first to kind of get my feet wet. And then I moved up to bigger ones. I do not mess with TQQQ. It's too volatile. Personally, I'm sure you can make a lot of money off of it doing cash secure puts and cover calls. But me personally, I do not do that. I don't know what UPRO is, so I'm not going to even address that. Amazon, Google, solid. I like it. If I would be buying Amazon or Google, I definitely will do cash secure puts until it will hit, and I will start doing cover calls on it as well. But you got to know your technicals to be able to get your levels set, okay? Because if you don't have your levels set, you can honestly take a massive L. Also, take your time with learning vertical cash secure puts because what you're talking about here is the real strategy. We have an episode that me and Mo did. We brought a guy on, TJ. He literally does this for a living, and watch that episode. Take a look at it. It's called The Will Strategist, and definitely watch that episode. All right, what's another question? Here you go. This is for you, Mo.
Mo, are you saying when people trade that their account go from? Oh no, yeah, I answered it. No, that's not what I was saying. I cleared that up.
All right, what's another question? Let me go back down here. Ooh, okay. I blew my whole month gains on one trade recently. My new max loss is my average daily profit. What's your thoughts on that, Mo?
Well, think about this. What relationship does that have with the market? Like, what logical explanation can you offer me that is objective for you to do that? It's not. So your stop loss should be based on market and market's level. And I've said this before, market doesn't operate in level, it operates in zones. That's something that you can study. Like, I've never seen someone say, this is my support and it's going to drop right by the penny. You can go on a larger time frame and be off by even 10, 15 cents, but that's why I use zones. But using your max loss as your daily profit is a guaranteed way of losing money, in my opinion. And I'm not trying to put you down, bro, or I don't know if it's a male or female, but I'm just trying to be honest with you. It's not a good way of doing things, personally.
Yeah. Every time Powell talks, market tanks. No, that's not true. And be careful if you're trying to trade based off of every time Powell talks that the market's going to go down. Didn't he recently, like, was it the last two, or not the last one, but the one before that? Didn't the market go up?
So majority of the time when Powell speaks, market will go up, and there's a very technical reason for that. When Powell stops talking or is done talking, the market rips because everyone's selling off their hedges because the event is over, and that's why we usually rip. And I'll give you a stat. 82% of the time when the 82% of the time when the minutes come out, whatever the move is, when Powell speaks, the move gets faded. That's a stat based on this year. Okay, so BG is saying I day trade small cap. So daily levels don't work. Depends. If you're trading like penny stocks, I agree with you, but small caps to a certain extent, you can use levels. But penny stocks, agree with you.
There you go. Do you use MACD and SMA, EMA divergence with the volume for plays? Thank God I didn't read that one like I was Mayweather.
I use supply and demand only.
Yeah, same here. I use supply and demand, support and resistance. That's really, for the most part, all I use. I also have the RSI sometimes just for confirmation to see if something's oversold or not on a daily or the weekly. I definitely use it when it comes to buying shares. Let me keep going. What time? Hold on. This one is like 7 p.m. for the other shows. No, I think I answered that. It's usually, I think, 8 p.m. and 8:30. I think Lawrence is at 8 p.m. I think Mark's at 8:30, and I think Abby and Chris are at 8. Let's see if there's any other questions. I don't know what he's referring to. Did you mention anything here?
I think he's talking about the trade he took. I think he took an AMD trade that I think he was talking about.
Yeah, let's see. Here's someone just kind of sharing their emotions they were going through. Yes, and I like that where he said, "Don't learn to trade while you need the money." That is a freaking fact. Stop doing that. I want to talk a little bit more about, well, I'll do it in another episode because I want to talk about the certificates and stuff like that and how to actually invest in yourself versus just always investing into the market. But that could be another conversation for another time. I think I got all the questions. Did I get all the questions?
Yes, sir.
All right. Mo, do you have any lottos for next week?
Okay, so
I mean tomorrow.
Okay, so couple of things. Make sure that you follow me on Instagram at OTB Clubhouse because I did post a trade idea that I'm not in. This is a good way for you guys to follow me so you guys can see in 60 seconds how I break a trade down. I'm not in it yet. That's one. Second is, let's see, you guys want to talk about lottos. Hold on. I want to show you guys. I'm going to take 2 minutes. I'm going to show them something quick.
Got it.
Okay, so SPX, we're going to use Bollinger Bands. 98% probability that everything stays in Bollinger Bands. And once it goes out, it goes back right in. So daily SPX, 42.25 key level. Show me one candle that was outside, and then you saw another second candle outside as well. You're not going to find it. So what does that mean? There's a very high possibility tomorrow we get to, or even overnight, we get a bounce because that's what volume sellers do on Friday. So don't beat that. I'm not saying there's not more selling coming. I think we're getting to 4,200. What I am saying is there will be a bounce, in my opinion. So for that, let's look at NVIDIA. So this is my 5 minute. I want to see. Hold on. I'm going to get 4 charts out because I want to see what NVIDIA is doing after hours. Okay. So let's get rid of everything. 5 minutes. So NVIDIA is at 408. Let's do something. Everything as at 100 moving average for daily. We're out the 50. So we'll just go over NVIDIA because we don't have time. Over 410.86, I'm looking at 415 calls. This is going to snap back so fast that you're not going to see it coming. It needs to get above that level. So simple. Pull a daily chart on anything tech. It's either at 100 moving average or just above or below it. If it's below it, I would wait for it to get above 100 to get basically a trade. Personally, I don't really big fan of zero trades tomorrow. For a lot of new people, the snapback's going to be so fast. If we see a recovery, you're better off adding Monday call, the next week call, but then taking profits by Friday close or leaving some runners because overnight, a lot of stuff's going to happen now. With that, that's all I had.
All right. Awesome. And we don't have, when's the Fed talking again?
Huh?
When's the Fed talking again? Do you know? Do you have the date
for the next meeting?
For that?
I don't have, I haven't checked,
Yeah.
but yeah, we'll talk. One last thing, Mark.
I think the minutes is only the next one I think that worry about. Go ahead.
So if you guys want to see a workshop, you leave a comment. So if you want Mark to do a workshop for certification, leave it so it builds confidence for Mark to say, okay, that's what people want to see. If you want me to do a specific workshop, leave it and we'll do it. there is a reason why we weren't doing this kind of content, because we didn't know is that's what you're gonna like. Now that we're seeing that this is what you like, we're gonna do more of that. So leave the comments, it'll help us so we can all level up.
Yes, comments does help us. So that way we know what you like, what you don't like, and stuff when we adapt. So clearly you guys like these lessons. That's the reason why Mo was doing it, and that's why I'm stay quiet for most of the time. All right, y'all. Anything else you got, Mo?
That's it.
All right, you guys, you can find me. I am a content creator. You can find me on Half Breed Observer and Uncultured Currency. Uncultured Currency is the finance section that I have. I haven't posted anything in a month, but don't worry, there's something that's going to come soon. Mo, where can they find you?
OTB Clubhouse on Instagram. But if you guys can really do me a favor, I'm on TikTok now, and it's OTB Clubhouse 1. I'm really trying to grow my TikTok audience, but I get like so many haters commenting on there. Like hopefully I'll get there. But yeah.
And YouTube.
Oh yeah, so every Sunday, let's say just for this month and next month, I'm going to be doing my mentorship watch list for free on YouTube. I did one on last Sunday. I'm going to do one again this Sunday as well.
What is your YouTube name?
The channel OTB Clubhouse.
Yeah, at OTB Clubhouse. It's a little hard to find, but you will see it. So just do OTB Clubhouse combined together, and it will pop up. Unless you want to pull it up to show people real fast, Mo.
It's fine. It'll be on my Instagram. So if they're following me on Instagram, I'll post a link there.
And remember, if you guys want the free books, is in the description of this video. The Dropbox link will be valid until 5 p.m. tomorrow. Grab the books. They're really, really good books. And like I said this before, you guys can buy yourself a Kindle from Amazon if you want. You can put it on there, or you can put it on your Apple Books by just dragging and dropping it. And there's a PDF file in there as well if you just want to just print out the PDF file or read the PDF file that way. So it has various different formats for various different apps and e-readers that you can upload it to as well. And again, everyone, I think this is pretty much it. All we have to share. We will not be here next week. I'm leaving town again, going on vacation again. So we'll be back after next week with a banger. Share this and come back in 2 weeks. Until then, y'all, peace out. And thank you for tuning in. Share, share, share. Bye-bye.
That's 100.